Hey all, welcome to ShareTrack. This is Raj here, and friends, today I want to talk to you about Caribou Biosciences. They have come up with their Q2 earnings report, and the market seems to have rewarded handsomely. So I would like to get started with this. Let's get started. Welcome back, friends. First, let us look at the post-earnings price action and technicals, and then we'll go on the same format like we have done for other companies like CRISPR and Beam and others. So first, let me take you to the price chart, and we'll start talking from there. So here we are in our chart for Caribou Biosciences, and each of these candles are a one-day candle. I have zoomed in so that we can see it clearly, and what I would like to point out here is that this is a huge gap up which happened on 6th of July. This was because of the news of Pfizer investing $25 million in Caribou stocks. So this gap up creates a technical vulnerability because every gap has to be filled. So if it was created on the way up, which means there's a downward pressure, sooner rather than later this has to be filled. And there is a down gap out here which was also created. And as far as Caribou is concerned, the market has taken the earnings report very positively, and we have got 3 candles. It's a bullish sign at present. And if I was to look at these 3 candles, they are a bullish pattern, and we seem to have some kind of a support out here at 6.27, which we have respected all the way from 14th of July onwards. So I still expect this to be a support. Our next resistance is going to be at 8.25, and let me make this a bit thicker for those on a smaller device to be able to see. And our momentum is above average, pretty good, plenty of room for RSI to raise. MACD is tending towards the signal line to cross over to the bullish side. So everything is looking pretty good out here for Caribou Biosciences. And next, let's look at some of the key highlights that Caribou presented, because I find it easier to summarize everything and keep the video short. So we'll go through that point by point. It will be very brief, and after that we'll go into the financials. So here on the screen, you can see that we have around 5 or 6 bullet points from their earnings. The first one is that CB010 antler trial dose expansion enrolling second line LBCL patients has taken place, and FDA feedback will come to us at the year end 2023, which means nothing major is happening this year for CB010. Catalyst, if any, will come somewhere around December, and the effects can be felt after that. Report initial dose expansion data in H1 2024. Again, first half of 2024. So action is in next year. So latest by December, and first half of 2024 is when we have any positive catalyst that may come from CB010. Then we are looking at CB011 camouflage phase 1 trial enrollment, which continues in refractory and relapsed multiple myeloma. And CB012 IND application submission is planned for second half of 2023. We are already in the second half. This could be another positive catalyst for Caribou, and this can happen anytime. So that can support further improvement in the stock price. They received $25 million equity investment from Pfizer. We already spoke about that. That's what gave them a boost, a gap up, which I discussed a few minutes ago. And they closed the upsized public offering, delivering $134.6 million in net proceeds. So everything that they had offered was taken up, including the underwriters' quotas and everything. So there was an equity dilution to the extent of $134.6 million. The market has taken it in its stride because Caribou needs the money to continue its progress towards monetization. And more than $400 million in cash equivalents and marketable securities sit in the balance sheet of the company, including this $134.6 million and the $25 million from Pfizer. And their cash runway is expected to fund the current operating plan into Q4 2025. So there is no worry until end of 2025. So this is what we have here. So as you can see, we don't have a major catalyst until the end of this year. That's for CB010. Apart from that, there is no major catalyst. And again, I think no news is good news for this company. It's coasting steadily. It has got enough money. And the results were not too bad and they came above expectations. So that's all good. Now let's compare their Q1 2023 earnings with Q2 2023 earnings and have a look at where they are. So here is a table which shows their key financial highlights. I've compared Q1 2023 with Q2 2023 like I did for the other CRISPR companies. So the cash position, there was a slight increase in cash equivalents and marketable securities from Q1 to Q2. It's notable that the net proceeds from the recent public offerings are expected to further bolster the company's financial position. Then we come to licensing and collaboration revenue. Although Q2 saw a decrease in revenue compared to the same period in the previous year, the reduction was attributed to a specific agreement with AbbVie by an increase from a veterinary therapeutics licensing agreement, indicating diversification in revenue streams. And when we look at the R&D expenses, research and development expenses continued to increase in Q2, mainly driven by personnel-related expenses, pipeline program advancements, and facilities, underscoring the company's commitment to innovation and growth. And if you look at the general and administrative expenses, the general and administrative expenses increased in Q2 due to various factors, including facilities and personnel-related expenses. However, lower insurance and legal costs partially mitigated the increase. But given the fact that we are in an inflationary environment where there is a lot of pressure on staffing as well as materials, so I think that this marginal increase is not that great when it comes to R&D expenses and G&A expenses, because the overall environment is inflationary. When we look at net loss, the net loss increased in Q2, reflecting the cumulative impact of increased R&D and general and administrative expenses. While higher expenses can indicate investment in growth, it's important to monitor these trends relative to revenue growth. Overall, I would give the benefit of doubt that this company is doing better. We are in an inflationary environment and there's going to be costs that have to be absorbed. That's also reflected in the net loss. In summary, Caribou Biosciences showed incremental growth in certain areas such as cash reserves and licensing revenue. The licensing revenue part is very important. I will talk about that in my own personal opinion about the company. However, the increases in R&D and general and administrative expenses combined contributed to higher net loss. The company's strategic decisions, including the recent public offering and diversification of revenue sources, suggest a focus on long-term growth despite short-term financial fluctuations. There is a lot of patience in the company. And here is my personal observations on Caribou. I think Rachel Horowitz, who has been with the company for more than 11 years, I think she's a protege of Jennifer Doudna, and she's the CEO and has been very good at her job, in my opinion, preferring to be in business rather than academics. She could have continued to remain a scientist, but she decided to get into business. She has shown an even temperament and is leading the company in a planned, practical, and steady manner, in my personal opinion. And I think Caribou is a long-term hold. Despite equity dilution, the intellectual property is developing along with the therapies. Their Chardonnay, that is a CHRDNA platform, is a major asset in my opinion because it has refined CRISPR-Cas9. So whatever happens to the CRISPR-Cas9 license or patent decision, it doesn't matter much at this point of time. And with names like AbbVie and Pfizer partnering with them and Jennifer Doudna on the scientific advisory board, I think this is a blue chip in the making. It requires patience. This is a long-term bet. It's not something that you can make money on overnight. 2 of their 3 CAR-T therapies are in phase 1 clinical trial and both have fast-track designation. So that's a big positive. While CB010 also has the RMAT and orphan drug designation. So that gives it an extra edge. And overall, given the inflationary environment, the slight increase in costs and loss was but anticipated. And I think, as I mentioned before, this is a long-term hold. This is a blue chip in the making, in my personal opinion. So that's what I have to say about Caribou Biosciences. Please let me know what you think about Caribou and put it in the comment, and I'll be very keen to hear from you. And that's all from me for this video. And I think I'll catch up with you again in the next video. As I mentioned, it's earnings season, and I'm trying to run as fast as I can to bring these videos to you. So we have had 3 videos today. So if there is any mistake or something in between, just please put it in the comments so that I can address it in the subsequent videos. Thanks and have a great day. Bye for now.